Hey guys, what's up? What's up? Welcome to the video I promised. So this video is going to be about the gold price action review. So, oops. So remember this week or last week, let's say, uh, where was the weekly open? Here it is. From the 5th of February or the 6th of February onwards, that week, we were looking at price action. So remember, I sent you guys a voice note. Now, if you're new to my YouTube, join the public journal chat. Everything I do is over there. We spoke about the 1886 to the 1892 level, and we're looking at the 50% between those two as well. Okay, so all these levels given on beforehand, yeah, I gave it around, I think, on Monday or Tuesday. We saw it work out on Thursday. Okay, now I'm not gonna go through Monday, Tuesday, Wednesday. We'll look at Thursday's price action. Okay, now on Thursday, right, if we were to go through this price action using what we learned about the market maker models, the basically the explanation I gave, okay, what can we see? So look at the time, 8:30, 8:45, 9. Okay, from here, the moment we tap this level, we are looking for lower prices. So if this is going to be your weekly range expansion, then of course we're looking for lower prices to go below the weekly open. Okay, we're looking for price to go below the weekly open. All right, basically to go and take out Monday's low right there, and it worked out perfectly. Okay, it worked out perfectly. Now on this day here, right, I walked you guys through, again, Telegram channel. I walked you guys through the cell over here. I sent you all recordings as well. I walked you guys through the cell over here, if I remember right. And I recorded that as well. And after that, we ended the session. We ended the walkthrough session. Yeah. If you are just going to be looking at this purely on the 15-minute chart, okay, watch. What's the range now? Let's mark out the ranges. So we have this lowest low here paired with this highest high. Okay, from this high to this low, if you look at this gap here, this one, yeah, we can see that bullish fair value gap was used right there. It was a point of reaccumulation. That means once we took out the high and when we started trading lower, what are we going to be using? We're going to be using this same level to look for shorts from. Okay, after this, when price broke down, okay, after this, when price broke down, what can we see? We can see we went down here. Okay, you see this here? It was an earlier point of what? Reaccumulation. So when we trade through it, it's going to be a point of redistribution. So not this one, but from here, the moment we traded through all the way down, we're going to come back up here. We're going to be looking for shorts again. So this was the other short I recorded for you guys, basically the one that I walked through with you all. Okay. All right, guys. So from there, when we started trading lower again, we were looking for gaps here. So we got the gap and we sold off again. But if we are going to use the same concept of redistribution, reaccumulation, see this big wick? So you see wicks, listen carefully, wicks are also gaps. Okay, so this wick right there, or whatever remaining portion of that wick was there, it was used over here, right? Right there. So we used it over here. Went down there. So first of all, this here, it's to mitigate this area here. And then this one here, when we close through this one, we are to be using this one over here for shorts. Okay, it's as simple as that. So if you truly did your backtesting, if you know, okay, this was a point of reaccumulation, this was a point of redistribution, you can easily flip it over as natural support and resistance ideas to basically take a continuation short or continuation long. Okay, now there are paths or valuations of price that will enable me to tell me, okay, short, look for order blocks, you look for fair value gaps, look for this, look for that, right? So of course I'm not going to go through that on Instagram, on YouTube. Okay, that's all private stuff. So I want you guys to focus on the reaccumulation, redistribution. Okay, because those are the simplest models that you can use to catch, whatever remaining portion of the move there is. Okay, now there are certain time macros. No, not the ones ICT is explaining. These are ones that I derive myself from, what, it's all explained in the Telegram group. Okay, so I have different time macros. I have specific minutes in every hour or in every interval of time that I use. Okay, that'll tell me, okay, volatility is going to be injected here, volatility is going to be injected there. It is not based on economic news events. Now, economic news, that's for the day of the week, meaning, for example, this sell-off, you pair this sell-off, you pair this mitigation over here with red news, then yes, we're going to get a massive injection of volatility. So that's the volatility injection for the weekly range expansion. Okay, but what about the volatility expansions within specific windows of time? That is something that will never be discussed in public. So that's only in the private group. Okay, but I'm just letting you know. There are times when I walk you guys through price, I say, okay, it should move now. It should move around here. It should move in approximately 10 minutes, 15 minutes. And you are going to be looking for those expansions into liquidity or gaps around that area. Okay, now there are going to be times in which it doesn't do that, where price is being distorted. Okay, then what's going to happen? Then the algorithm is going to kick in at another specific point in time. Okay, it's going to kick in at another specific point in time. Now, if I were to give you guys an example, so that's it about gold. So we saw this here. We looked at all the points of redistribution, reaccumulation, and we redistributed from that. And I walked you guys through this entire process on that day itself, Thursday, the 9th of February. Okay, then I also walked you guys through this nice sell-off over here as well. I was saying, okay, guys, looking for sells over here. Our first terminus is 1857. We got 1857. Second was 1852. So all the way down here, we did not get that because it was Friday. So the weekly range was basically capped. Okay. Now, if you take a look at Bitcoin, so today's Sunday, and on Bitcoin, I walked you guys through sells here. Okay, so we were looking for 50 to 100 points only. All right, so I went to the 3-minute chart. So I'll explain it to you all. I went to the 3-minute chart. I said, okay, guys, around here, I told you all, I sent a message saying, okay, we're looking for bearish order blocks. This is your bearish order block. Then I said, we need to see some measure of intermarket analysis. So what does that mean? It means bearish SMT, right? So from here, okay, at this high, where the order block is marked, right? If you draw a line to the left, what do we have? Higher high. From here, we have a lower high. So we have bearish SMT. So if we have bearish SMT, I know that I can look for sells if certain scenarios play out. Now, we came down here, validated the order block, we sold off, price came back up into it, and then we consolidated. So this became a part of a larger time frame play. Okay, I said at around this point, I said, okay, guys, you either get out because price is taking too long. You either get out, or you're going to have to accept the risk and keep it open. No, I kept mine open. Okay, I kept mine open, and I enjoyed the move. It was basically partials at 50 points, full take profit at 100 points. Okay, so sells right there, partials, full take profit. Okay, so we have that right there, and then you can see how price is now. It basically is pulled all the way back up, over here. Okay, so now what I would like to do is, if I want to take another sell, okay, if I want to take another sell, how am I going to go about looking at this? How am I going to go about looking at this for sells? Well, I need to see price trade below something. Basically, I'm looking at valuations in price. Yeah, I'm basically looking at valuations in price. So this is a how many pip range? This is a 234 point range. Okay, 234 point range. So over here, if I'm looking for sells, I'm looking for sells to take profit all the way down here, this low. Yes, I can go down here, But why would I go for this if I can have a guaranteed take profit here? You get me? So I would go for this. Now, how would I go about doing that? You just purely using the concept of reaccumulation and redistribution. Okay, just purely by looking at that, what can we do? See, right here, we have a gap. So we reaccumulated from that. So now if we go down, trade through this, we can use this as a natural area to sell from. Same thing. If you trade below this as well, looking for the same thing. Okay, so hypothetically, because clearly we can't, there's no confirmation as of yet. If it's going to go down, it's going to go down like this. Like that. Because that's the way you would be looking at price. This is the way in which you will be observing price. Okay, this is the way in which you will be observing price. Now over here, okay, just purely based on what I'm saying, I'm not going to show anything else from here, but if I go to the 5-minute chart, okay, I'm looking for a gap now. I'm looking for a gap to sell from, not to buy from, to sell from. Okay, but first I want to see, do I have bearish SMT here? Anywhere over here? Well, I have a high and I have a lower high. I have a high, I have a higher high. Well, I do. Okay, so now I want to be looking for a fair value gap. 5-minute chart, I don't have. 4-minute chart, don't have. 3-minute chart, don't have. 2-minute chart, have. Right there. Okay. High, this yet to form. So no swing high form just yet. Then let me check the 1-minute chart. Okay, 1-minute chart, what do we have? High, no swing high yet. High, this is about to break this high. See, this is about to break the high. So if I'm looking to sell, okay, if I'm looking to sell, I need to see a big rejection from here, from this big wick over here. Looking for a massive rejection over there. If it is not provided, there is no setup. Simply speaking, there is no setup. See, no setup. Okay, so you need to have certain things play out for you to have a sell, certain things play out for you to have a buy. And when all of these things are stacked together, right, they provide enough confluence to be confident in calling out moves, like how I did today. This one right there. Okay, all of these confluences must be stacked like crazy. Okay, stacked like crazy. All right, guys. So with that said, that's the gold price action review. Weekend Bitcoin review as well. I gotta go. It's my mother's birthday today. Yeah, yeah. See you guys in the next one. Good luck and good trading. Bye bye.